Today is going to be very exciting. I'm recording in my own computer. Today is very exciting because we'll be talking about MP materials. Yep, MP materials. This is actually a commodity play. I know, right? Commodity play yet again. But this is, in my opinion, before I actually begin, the reason why I've been actually more into commodity plays is what we have been preaching, right? We have been preaching inflationary beneficiary stocks. We've been preaching, commodities because we are as a hedge into our heavy tech portfolios, right? So I'm pretty sure a majority of you are actually heavy on tech, if not heavy on Jeremy stocks, which is Tattooed Chef and the usual. But I believe that we should be following earnings growth momentum, right? We talked about this in our previous lives. We talked about this in our previous videos. This is where we should be, where the money is at, where the earnings is at. Like, we should be a growth earnings whore, right? That's my opinion. So again, this is also part and parcel of the portfolio strategy, because portion of our portfolios is allocated to thematic plays, right? Thematic plays, and we're not going to marry this stock simply because it's going to be the future, but these spike in prices, commodity prices, especially for upstream mining companies, will give a significant jump into the whole, helm of earnings for specific companies, right? So again, before we begin, appreciate if you guys can actually smash that like button, smash that heart button, guys. Show brother some love. And we want to spread the algos in the Facebook group itself. We want to have, there's 8,000 people and growing, right? 8,000 strong in this group, so hopefully everyone can hear it. I always share thesis on my companies, always posts on the group. I try to provide as much value as I can, so appreciate it if you guys can smash that heart button. And I noticed that some of you have been quite inactive lately. I'm not sure. Just want to remind you guys that this is the time. You want to make money a decade from now, this is the time, guys, right? You want to make big money. You want to have the journey to your FU life. We got to start building thesis right now, investing with our portfolios. This is like, I wish I can literally go to you and scream at you. This is where we make money, right? This is where we make money. Now, I know we should be mindful of our portfolios. I know we should keep cash. I know we should be, setting a portfolio strategy. But the reason why I'm actually screaming out to you guys right now is because this is insane. What we should be doing versus a decade from now is to be looking at the companies that we want to hold and DCA on for 10 years, right? For 10 years, because whether inflation comes, what do we do to counter inflation? We got to invest, right? What do we want to do when commodity is actually going up higher? We want to go with the trend, right? This is a huge commodity super cycle, and whether or not it's expiring doesn't matter because it already has been. You can see all spot prices from lithium, right? We talked about lithium in another video, right? From steel, from metals, or from obviously Russia v Ukraine accelerated all of this. But this is insane. Like, everything that we do everything that we know from the macro perspective has actually inflated all these prices. So in turn, inflating what we're going to discuss today, which is insane. So all in all, we should be riding this trend, right? Earnings growth is here to stay. Earnings growth momentum is here to stay for these companies, especially upstream mining companies. Now, we talked about Oxy. We talked about, I recently mentioned another oil and gas company, which is called Consol. That is another, beast of earnings that is yet to come, in my opinion. And that's like stage 2 when it comes to that. So, I'm not forcing you guys to buy the commodities. I'm not forcing you guys to actually go into oil. It may be overbought as a sector overall. But then again, we are sitting on a gold mine, literally. If we know how to hedge our portfolios, if we know what we are talking about, if we've been building thesis on them, this is actually a super cycle. Once in probably 10 years or 15 years is now commodity time to play. Yep. So now back to MP Materials. So what is MP Materials? What do they do? I opened up the 10K that they recently filed, and I just jumped onto the MD&A. It's loading slowly. I don't know why. Yeah, there we go. So we have MD&A, Management Discussion Analysis, and I'm going to jump right into it. Now, I've already built a thesis on MP Materials. Okay. And I just want to say that, sorry, there we go. So I basically can summarize what is MP Materials. Now, and I did not notice. So this is why building thesis, and it's free, right? Building thesis is free. Well, of course, one-on-one sessions, coaching, if you guys are interested, you can actually reach out to me or reach out to Andre. This is where we build thesis together. Yeah. But other than that, I mean, to sharpen your thesis, to fully understand what to do, how to do it, you can actually, look for me. But building thesis itself is actually for free. So that's why at these times right now, I know, the bear market is actually not here anymore, but it might dip again simply because of any macro factors and I'm not surprised. Now it's just March, by the way. So my point is building thesis is the best way because we can always learn something new, right? And learning something new for me will be that, okay, we need magnets in our phones. We need magnets in EVs. We need magnets on wind turbines, right? So, well, I didn't know this until I did this thesis. Now, this is where it got interesting because that's what MP Material does. Now, I'm trying to think why. I mean, I'm going to MP website. Sorry, MP Materials website. So, as I was actually digging my thesis and doing it, I was, looking at the 10K, I was looking at the website, and I actually looked at the, let's look at investor relations website where they actually have this video. I won't be going through all of the video, but this is the story. Now, and, the CEO actually talks about their use cases. What is wrong with my internet today? Watch the MP Material story. Okay. So I'm not going to be watching the whole video. It's 7 minutes, but just want to be showing the use cases. And there we go. Basically, we got these use cases here. MP Materials. It's not forwarding to. With motion. It's not allowing me to forward. Anyway, these are the use cases. I don't know what's wrong with my internet today, but they do magnets. Yep, they're actually sourcing rare earth materials. Yep, separating the materials which is in different phases, different stages, and the end product is to be using magnets. Now, magnets to obviously their grade, not the simple magnets that we use every day, but knowing that it's a very high beneficiary of EVs, which is a very sexy product market fit for me as well, right? I think about what am I going to be investing in? What am I going to be? What is my money for the future? And I think about my kids' education. I think about kids' investments. I think about EVs. That's the best way I can put it. So, okay, hold on. Let's see. Something is wrong with my internet today. I'm not sure if you guys are seeing a blurry video, but that's that. Okay. Anyway, so this is the MD&A, largest producer of rare earth materials in the Western Hemisphere. So the biggest components, and this is the sexy thing. What I've read about was that, when we want to monitor commodity prices, and especially with the commodity super cycle here, we want to know who is the ones actually mining it as well. Who are the miners, right? So there's 6 prominent companies that the management highlighted in China that's actually doing this. There is, actually MP Materials is one of the biggest ones in US. In fact, close to the only ones, if I'm not mistaken. So they intend to be the largest producer of rare materials in Western Hemisphere alone, so in US basically. And again, so there's a beneficiary of 2 things. Number one, it's a beneficiary of US trying to be self-reliant, self-sustaining, right? This war actually pushed as is good news for the West because they want to be producing their own shit. They don't want to be relying on third parties anymore, and just be basically mining themselves. And that's a huge benefit. Now their mine is actually in Texas, which is good, right? Where all the minerals are, where all the mining can be, and where all the taxes are actually lower. That's actually good news. So that's where they operate something called Mountain Pass. That's the location, and they mine rare earth. Yep, they rare earth processing facility called Mountain Pass, and they actually mine what's called earth elements, REE. Yep, which is the input for magnets that enable mobility of EVs, drones, defense systems, wind turbines, robotics, and many other high growth advanced technologies. So that is, awesome stuff, right? Awesome stuff. Again, if you guys are watching this live right now, click hashtag live so that I know you're here. If you're watching this on replay, click hashtag replay. So that's all good. Yep. So where were we? We currently produce a rare earth concentrate that we sell pursuant to the A&R offtake agreement. Now, we want to talk about their clients, right? So there's a company called Shenghe Resources, right? Singapore is a Singaporean company. And Shenghe is actually an affiliate of Shenghe Resources Holding, which is actually a China company. Yep. Singaporean is actually their operations in Singapore is actually just a subsidiary. But my point is Shenghe is actually takes in majority of the revenue. How they're actually generating revenues, actually selling to Shenghe. Yep, it's as simple as that. So there's a concentration risk, which is bad. But the good news is that since the orders are actually not so big, everyone, Shenghe can actually take it all, right? But the point is, the job of MP Materials is actually mining, which is the upstream part of things. But they're also focusing on the downstream where they actually package the product and actually sell off. Because I'm guessing they want to be trying to be vertically integrated, and they don't need to be. Bear in mind, they don't need to be with the size that they are right now, with the potential earnings to come. They don't need to be. But my point is, this is where things get more better because the prices of these what is the solution called NdPr, right? Neodymium praseodymium oxide. This is what they're actually selling, right? The rare earth materials is actually growing to $10,000 per metric ton, which was $4,000 just a year ago. That's how crazy the commodity prices have actually gone up, right? So all in all, MP Materials, they are mining, their separation of rare earth, they're packaging it for, in the end product is actually magnets, and they're selling it to EV companies and whatnot. So that is a huge fit because it's EVs. It's a good story, right? Drones, defense systems, and whatnot, which is actually in the video, but it could not load. So yeah, that's good. So highlights from the year of 2021, they just reported fourth quarter. The revenue growth 147% year over year. Yep. Driven by, oh, did I stop live stream? Wow, I hope I did not. Sorry guys, I'm just afraid I stopped the live stream. Financial Fortress, because I actually, anyway, there we go. Okay, I'm still talking live. Sorry. That's great. Awesome. So I'm still here. Okay. Yeah, I'm still talking live. Sorry. That's great. Awesome. So I'm still here. Okay, there we go. Okay. Oh my God, I'm seeing my own. Okay. Now back to the MP Materials. Now revenue growth of 147% year over year. Yep, driven by increases in REO production and sales volume realized, price per REO metric ton, production growth of 10% year over year. So whenever we want to talk about commodity companies, we always have to talk about capacity. Okay, what is the capacity? We always want to talk about the ASPs, the average selling prices. We always want to talk about the growing capacity, whether or not the capacity can actually grow year over year. What is the size of the mine? How big is the mine? What are the phases? What are the stages? We can actually see expansion from stage 1, which they actually highlight here, stage 1, stage 2, and stage 3, which is their downstream expansion strategy. And that's where more revenues actually are generated for the company, right? So the fourth thing is that we want to know what is the sustainability of the average selling prices, because commodity prices can be going sky high for probably just a year or two. But if we want to invest in this company for the long run, then we need to know the normalized rate, which is actually an estimate either from analysts or ourselves. Could it be 5,000 per metric ton? Could it be 15,000? Well, it can't be 15,000 because now it's spiking all the way to 10,000. But my point is we need to know all these factors to be, considering and building a thesis. So net income of 135 million compared to a net loss of 21 million. So it's a turnaround, right? It's a turnaround, and obviously it's a beneficiary of rising prices. But the question is it sustainable enough? And can their production grow more to, what's to come? Okay. So largely driven by higher revenues and one-time non-cash settlement. Adjusted EBITDA of 219 million compared to 42 million. It's actually growing 414%. Net cash provided by operating activities of 102 million and increased from 3.3 million. Adjusted net income is actually growing 693%, and diluted earnings compared to loss, right? These are awesome stuff. So net proceeds of 672 mil, convertible notes, which they raised. Steady progress on stage 2 optimization and stage 3. Basically, they are increasing their capacity, they are increasing their investments into the mine, and these are the performance indicators, right? So we got REO production volume and metric tons. It used to be 27,000. It's actually growing very healthily. That's what we want to see. REO sales volume. This is how much they can actually sell to Shenghe, and that's where the whole story is sexy, because they can literally just sell off, majority of that in Shenghe, and that's all, right? Their capacity is all filled. So they do not have to worry about marketing or sales or time delay. And bear in mind, this is like 99% efficient, right? Sales volume versus the capacity that they have is great. Realized price per REO, 7,007. Now, based on this, and this is why MP Materials has actually gone up like mad, their stock prices, is because of rising rare earth prices, right? Again, it's a beneficiary of the Russia v Ukraine. Metals, rare materials, commodities overall, whatever, everything's going up. So we got rare earth oxides saw 148% to 10,000 per metric ton, and they just reported 7,000 into 2021. So again, what is the normalized rate in 2022 so that we can actually project the revenues to come, and after minusing off, all the operating expenses and whatnot, can they reach into a bigger, expanding the margins, bigger profitability, all that stuff, which is, very exciting, because this is a company based on the thesis of, and to me it's thematic. Like, I'm not going to be marrying this stock too much until they show progress. I know it's a good long-term game because they're actually supplying something good for, EVs, right? Who knows? And bear in mind, miners, battery miners, right? Rare earth material miners, commodities, all of this is actually, these good for EV batteries, or magnets or whatever components of part of EV cars. We should be investing in these companies for the long run. But having said that, I just want to be, I rather invest my majority of my money in Tesla, where they're vertically integrated, they already have a new level of business, they're stable, whatever. But my point is, taking advantage of the huge commodity prices rising like mad, that's not doing that. It's just insane. So that's why, a good chunk of my money is actually going to be focused on that. And this is the thesis, right? So I'm not going to be discussing about too many things. We just have, half an hour overall. But all in all, the important points to take note is that, what is the demand? Yeah, what is the demand for REE? Smartphones, mobile devices, fiber optics, lasers, robotics, medical devices. The TAM is actually huge, right? The TAM is actually huge. So it's not exactly just on Shenghe. It can be actually, obviously we can actually find other other people to sell to. But my question is, and is this similar to LAC? Because LAC, they have a joint venture with Ganfeng Lithium on a mine, and the rest of their mines are 100% owned. And Ganfeng has 11% stake in LAC. Now, my point is Shenghe having an 11% or how many percent stake in MP Materials as well? So this is something that I did not find, but the thesis is still intact, right? And we're looking at earnings. We're looking at, the rising demand for NdPr, maximizing production efficiency, three and a half times greater. That's what they've been doing in Mountain Pass. The thing that is limiting me though is what is their growth prospects, right? To be investing in the long run, we need to know, again, it ties back to number one, what is the ability that can actually increase capacity, and how big is Mountain Pass overall, so that they can, because it's a different scenario than LAC. Because LAC, they have 3 sites, which is going to have a total of 144,000 TPA, tons per annum. But in this case, it's 42,000 metric tons. So what are the metric tons that it can actually generate in terms of in the future to expand capacity and whatnot, right? So this answering these questions will tell us how long of do we want to hold on to this company, because I'm comparing with LAC because it's a similar thesis, similar reason why I'm buying these two. I haven't bought into MP Materials yet. The sky just shot. The price skyrocketed when we were actually doing thesis with my own group, right? So bad timing. But anyway, mineral reserves, right? We have to also know what are the reserves, because this actually can tell us what it relates to the capacity that they have, what they can actually mine. There's 2.1 million short tons of REO and 30 million short tons of ore at Mountain Pass. So that's good news. I mean, 40,000 metric tons is just just a fraction of what they can actually have, right? So these are really important. Let's jump into the numbers now, guys. Let's jump into the numbers, and I'm going to go to the table of contents, and I'm going to go financial statements. Okay. So jumping to the numbers, we are looking at, now let's look at the balance sheet first. So balance sheet, cash and cash equivalents, awesome, right? 1.1 billion, double of what was in 2020. Wait, is this in thousands? Yes, it is. 1.1 billion. Total current assets of 1.2 billion. Restricted cash, property, plant, and equipment. Now, this is very, very asset heavy, right? Having property, plant, and equipment of assets worth 610 is actually really heavy. So, total assets put them at 1.8. Current liabilities is very, very sexy because, accounts payable, 35 mil. Total current liabilities is only 59 mil. So that is just like, a sneeze they can settle, like a sneeze they can settle. So non-current liability is actually the majority, and long-term debt is actually quite worrying. 674 is actually quite a huge amount in comparison to how much cash they have. But the good news is the cash they have is like 2 to 1. So that's good news. 100 mil for finance these liabilities. Okay, so it was their total liabilities at 880. So it's actually a healthy balance sheet, right? Very healthy. It's just that it's quite worrying in terms of the long-term debt, which, it's understood, right? They're just a new company. They're still growing. So let's move on to the income statement. We're looking at revenues, which is actually, nearly triple of 2020 revenues. Also because of the prices that we saw. Total revenues at 331. So we got cost of sales. Now let's work out the amount. The cost of sales, 76253 divided by 331952. We are looking at 23%, which is not too bad, right? Cost of sales 23%. And bear in mind, they don't need marketing, right? That's another good point for this company, because they're just all selling all to Shenghe. G&A, this is important as well, 57215 divided by 331952. We are looking at 17% G&A, which is very, very good. Very good in my opinion, right? We expect this company to be more labor intensive, obviously asset heavy as well, ish. because of the, PPE. But that's, that's that, right? So DNA, okay, we're looking at total operating expenses at 166 mil. So thanks to the ASPs, the rising commodity prices, we can actually have close to 40% operating income at 160, and after taxes we're looking at 135. So let's see how much income. Oh no, this income expense. Okay, so interest is actually 8 mil, right? Sorry. So okay, I got it wrong. Operating income is actually 165. Other income, which is not core, so let's not add that in. Minus taxes, and then we got 160. Okay, so net income, let's factor in everything and just say their core operations is at 135. We divide that by 331, which is their revenues. We are looking at a 41% net profit margin, thanks to expanding margins, thanks to the ASP. Yep, that we looked at just now. Now imagine if the prices of REO is at 10,000 compared to 7,000 in 2021, that would be 10,000 minus 7,000, 7,007 divided by 7,007. We are looking at a 30% increase and potentially more of an increase in in their net income. Well, it could be adding more because there's a 30% increase in revenues, right? So let's work out roughly how much it can actually generate net income, right? So imagine 331,952 divided by 7,000. We are looking at $43 per. So if I'm actually prorating, yeah. So imagine 43 times, you guys can't see my calculator, right? So 43 times by 10,000. We're looking at 430 mil in revenues for this year. If let's say 10,000, the prices of rare earth is actually normalized at 10,000, we're looking at 430 mil. Now, ever since then, ever since the hike in revenues, their operating expenses is somewhat reduced or maintained at 166. So let's assume 166 is still there. We want to work out the operating income. So 166 mil is still maintained. We are looking at an operating income of 263. Yep, 263. So 263 times with taxes, let's put 25% of taxes. We're looking at 197 mil in net income. Yep, 197 mil. So I'm checking the date of this. So this is February. Okay, this is February, by the way, because again, they recently spiked. Now I'm having a hard time trying to find the spot prices for rare earth materials. I'm going to be searching more, but it spiked again. That's why the stock prices actually spiked again. So February is late already. I think the prices at now is 13,000, 15,000. But let's look at the market cap, right? So we've got MP Materials market cap. So, okay, that's the bad news. That is the bad news, guys. Their market cap is at 9.73 B right now, and 197. So we're looking at a potential net income of 197 mil because of, based on 10,000 per metric ton. So 9730 divided by, was it 150 just now? 197, sorry, 197. We're looking at a forward PE of 49. So again, do they deserve a premium? They are the only big player in US, right? These type of mining companies, do they deserve, a PE of 20 or 30? Do they deserve 50 PE, and can they still be growing? So a lot of factors remain. The first factor is whether or not the normalized price that we deem 10,000 is sandbagged or too optimistic. Okay, that's the tricky thing when it comes to commodities. We can't project the price, right? So this is the tricky thing. But if we foresee earnings yet to come more and more, that will grow eventually, that will be a sharpened thesis as a catalyst to be, bullish, right? The second thing is we need to identify whether or not Mountain Pass, which is, a lot of reserves, a lot of capacity, but how can they grow? Can they still grow capacity 10% above and whatnot, right? So think about it. Even if on another metric based on the capacity that they have, and I believe it was on the first page. Let's go through that again. So we look at MD&A. So let's work out another way around of revenues, right? So what we did was a prorate. Let's work out, I believe this should be more accurate. Now, their production growth of capacity is 42,000. So 42,413. And assuming they do not grow 10% in 2022, and we times by the so-called normalized rate that we saw in the article of 10,000, we are looking at 424 million in revenues, minus off the 166 million that we talked about on operating expenses, maintained. We're looking at operating income of 258. Adding a 25% tax, we're looking at 193. So it's not far off to where we were. It's not far off to where we were. We worked out 195 in net income. That puts their potential PE ratio to be 40 again, right? 40. Now, that's the conservative or bear case scenario for MP Materials-ish. Let's work on a bull case scenario that they can actually grow another capacity of 10%, right? So it's 42,413 times by an extra 10%, we got 46,000 times by the normalized rate that we worked out. Again, we have to really work out whether or not it's normalized, right? So 10 times 10,000, we're looking at a potential revenue of 466 million in 2022. Yep. So minus off the operating expenses, we are looking at 300 mil in operating income. Taxes, we're looking at 225 million instead of 195 million on the bear case scenario. So bull case scenario, 225 mil. And if you divide by the market cap, 973,225, 973,000 divided by 225. We're looking at, again, 43 PE. Previously it was 49. It's just an, improvement of 7 PE, which is still good. But, then again, is it a price too high for this type of company? Is it worth as a thematic play, right? Again, remember, commodities is highly dependent on prices, but this is the story, right? We're looking at MP Materials. We're looking at whether or not they have, a good fit, rising, capacity, improving use cases, improving prices. What will the price be eventually when inflation actually stops, when commodity prices stop growing too high as they are? What will be the impact? So those are the risks, right? The risk is that we are paying a too high a valuation. We are paying just solely because of commodity prices. If you guys want to be safe and ride on the commodity price, we can just simply buy an ETF that encompasses MP Materials, encompasses LAC, right? All this is possible. But all in all, this is the story and game plan of MP Materials. Hope you guys got some value out of this today. Don't forget to smash that like button and, smash the like button, especially on our YouTube. And I'll see you guys next week. Thank you.